Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike and Al.
And it is Saturday, and we're going to be talking about money. It was the day that lived in infamy. So said President Roosevelt. It was December 7th, 1941. The United States was very aware of what was going on in the Pacific. They had actually cracked the code, the Japanese code, purple. And so they were able to monitor the ship movements of the Japanese Navy. They were able to follow what was going on. And there was a lot of concern about what was going on in Hawaii, which is where we had our Navy stationed. And because they thought there was a potential of an attack on Pearl Harbor, they wanted to make sure that it wasn't sabotaged. They did not expect an attack on Pearl Harbor. They expected that the Japanese Americans would sabotage what was the airports, the ships on Pearl Harbor. So they lined up all the planes wingtip to wingtip so that the planes were all lined up very, very close together. They lined up the ships stem to bow so that the ships were all there together. And they'd cracked the code. They'd cracked it purple. And they knew what the Japanese were doing. Only it went silent about 90 days before December 7th. It just went completely silent. And the analysis of what had happened was that the United States intelligence decided that Japan was planning to attack China or Manchuria, or they were going to invade there. And that was the anticipation. They considered it really almost impossible to attack Pearl Harbor. That was our strong point. What we didn't know is that the Japanese Navy set sail, and they set sail on a direct path to Alaska. And their ships and aircraft carriers, like 6 football fields long. It could have easily been seen. Had we had satellites in those days, we would have seen it. But that was before satellites. And there was no code. And we were expecting them to attack China, not the United States. It was almost considered impossible that they would try to attack the United States. And so as that Navy headed toward Alaska, it made a 90-degree turn and headed for Pearl Harbor. And of course, you know what happened. It was a complete surprise. The ships were easy targets. They were stem to bow. The airplanes, wingtip to wingtip, were easy targets. It was a devastating attack and launched what's happened in World War II, put us into World War II. And the whole point of saying all of this is we confused the improbable with the impossible. We thought it was almost impossible that Japan would attack the United States. Very probable they were going to attack China. But as we go into 2024, the point of all this is it's important not to confuse the improbable with the impossible. Don't think that, as we started 2023, people thought it was impossible that the Fed could raise interest rates and not have a recession. Improbable it might have been. That's the way it turned out, but not impossible. And this is the time of year when people really begin to look at stocks and bonds, and you get articles in Barron's and on CNBC and in all the newspapers about what's going to happen in 2024 with the economy, what's going to happen with the stock market, what mutual funds to buy, which mutual funds to sell, what stocks to buy, what stocks to sell, what to do with your funds. Do you buy bonds? Do you buy cash? I mean, at the beginning of 2023, there was a big push. Sell all your tech stocks and buy bonds. You're going to get 4 to 5%, and tech stocks are going to crash. $250 billion in the month of December and January flowed out of stock mutual funds, tech funds, and into bonds. For the investors who did that, Bonds had one of their worst years ever. One of their very worst years ever. People didn't make 4%. They lost money if they were holding bonds or bond funds. On the other hand, tech stocks did okay.
Just okay, Mike?
They did even better than okay. Some of the tech stocks did better than okay.
All the big tech stocks, the big, well,
at least during the first part of the year.
30, 40% up this year, if not more.
Yeah.
Some of them 100%.
Yep. So, I mean, don't confuse the impossible with the improbable. What we hope to do in this program and maybe a few other programs that will be coming up is to set the stage. We have no crystal ball, but we can look at where things are on a probability.
According to BlackRock, Mike, there's still $4 trillion.
Oh, yeah. There's a ton of money on the sidelines. But let's talk about the economy before we talk about the market first.
Let's do it.
You know, the big thing has been the Federal Reserve raising interest rates. And the whole consideration is that the Fed was raising rates, and so we were headed for a recession. So where is the Fed headed in 2024? According
to all the predictions, are heading down. They're going to start lowering interest rates. According to Bill Ackman, who people like to listen to, he's head of Pershing Square Capital, billionaire investor. He said if the Fed doesn't start raising interest rates, we are going to hit a hard recession.
If they don't lower rates, you mean?
Lower rates, excuse me.
Yeah,
yes. Yeah. Did I say raise rates? Lower rates. Yeah. And so with the unemployment picture the way it is, we're talking about the economy. We can't talk about it without talking about unemployment. The picture of unemployment is still that we're still not filling jobs. And as long as people, all the studies, every research is out there, Mike. Every research is out there. It's just saying, okay, credit card debt is increasing in the holidays. Okay, fine. Is it at ridiculous levels? No. As long as people feel that I have a job, I can get a job, and I can get a little bit better job and make a little bit more money, they're comfortable with this spending.
They sure are.
And they've shown no signs of slowing it down.
And during a recession, what you usually have is people quit spending. They're worried about losing their job.
Mm-hmm.
They're worried about their job hours being cut back. And so they retract. They don't spend on restaurants. They don't spend on travel. They don't spend on...
And you remember last year, right? What happened? Oh, Microsoft's cutting 10% of its workforce. Oh, this company's Salesforce cutting so much of its workforce. And those just turned out to be normal, everyday, every year cycles that they go through, that they attrition, that they just, okay, let's get rid of dead wood.
Yep.
And people mocked it as, oh no, this is we're heading to a recession because they're cutting their work. They're not cutting their workforce. They have I don't know how many hundreds of thousands of employees, but they go through and do systematic review and say, we really don't need this many people anymore.
And they go through and say, you're not cutting it, you're out.
You're out. Exactly.
And we're going to go hire people to replace you.
And then with COVID, right, what happened with COVID is that companies thought, okay, we don't need as many people anymore. And they laid them off, realizing, oh, wait, we do need them, trying to hire them back. And so what they think this time going around, even if we do hit a mild recession, that companies are going to say, okay, let's eat it for a little while because we don't want to have to chase employees bringing them back because we're going to need them.
So we talked all during 2023 about the fact that at the beginning of the year, there were 4 million more jobs than there were workers to fill those jobs. And that condition continues. It's not 4 million. It's probably down to 2 million. So there's been some shrinkage in the workforce some shrinkage in the unfilled jobs. But it still's not gone away. It still exists that there's more jobs than there are workers. And as long as you have more jobs than there are workers, even when you have cutbacks one place, it's like trying to push the beach ball down in the swimming pool. Push it down in one place, it pops up in another.
Mm-hmm.
People move from one job to another.
Yeah, and people assume that, oh, wait, when ChatGPT and AI came about, that robotics and AI is going to replace workers. That really hasn't happened. According to a paper in Japan, Mike, from 1978 to 2014, they found that when they put a robot in for a job, right, per 1,000 employees, per 1,000 workers, that employment actually increased by 2.2%. The reason they believe this is because the robot did make the company more efficient, but they also said, oh, wait a second, now we're more efficient. Our business is growing. We need to hire a couple people back to keep the business that we're getting.
Yeah.
And so they're seeing this, and they're seeing this throughout.
And the one thing that happened is, if you look at the 1970s to 2015, is the workforce became more educated.
Mm-hmm.
That was a significant change from what was happening. And it's going to continue to go in the future. When I graduated from high school, they said, you can always get a job as a ditch digger. Nope. That's all automated. You want to get a job as a ditch digger, you better get an education, become a computer data input operator.
Yeah.
So unemployment will probably continue to be low.
Right. But
wages are going to continue to rise.
And we're forgetting one other aspect, Mike. Baby boomers are eventually going to retire.
Yep.
They're not going to work forever. They are working longer, but they're not going to work forever. And they're going to eventually back out of the workforce, whether it's part-time, full-time, or whatever. And so those vacancies also need to be filled.
Yep. So, unemployment is probably not an issue, which means the economy should continue to chug along without the recession. Not in 2024 at least, maybe 25, 26.
Eventually we're going to have it. Something's going to happen, right? Keep predicting, right? Eventually the Mariners will make the World Series. I don't know, maybe not in my lifetime, but maybe. I'll just keep predicting and it'll eventually come true, right? The only team that hasn't made it
is the Seattle Mariners.
Exactly.
But anyway, don't go away. We'll come back. And we won't talk that much more about the Mariners. Well, maybe.
About money with your AFC team, Mike and Al, on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
We left talking about unemployment. We both think the unemployment pitch is rosy for a while.
Yes.
We don't see any problems. Now, when it comes to inflation, though, we see it heading in the right direction, heading down, but we know it's sticky change at any point.
Oh, yeah. Prices go up like a feather.
Yeah.
But the PCE that was just released for November was just 3%. It was hanging up around 5% and had been down to 3%. The CP. So, inflation is not down to the Fed's 2%, but it's certainly down. The Taylor principle says, which means the Fed can still control inflation by being at 4%. They can begin and still have an effect on inflation. Inflation, however, is that people don't, while prices are stabilizing, people remember that they used to buy a dozen eggs for $3. Mm-hmm. They used to buy it much. I don't pay attention to the prices anymore.
No, but that is a big concern, right? All the stuff reports I hear is about food prices, and food prices are up. And will they come back down? Who knows?
Yeah.
This talk of grain prices rise, the fifth grain prices, oil, another thing we haven't really discussed. But if we've seen crude oil prices come down, right, which is deflationary, but who knows, right? In 2024, whether there's a big meeting with OPEC and whether Saudi Arabia decides to cut back. And that's the prediction, is that they're going to cut production again.
Oh, they have cut. They've decided to cut a million barrels.
Right, and they might cut even further just to boost prices back up.
They have to cut because oil consumption is going down. Gas consumption reached a peak in 2018, and as we move toward electric vehicles, oil demand is continuing.
Right, and in Europe they had a mild winter last year when they shut them. It didn't cause a supply shock that we thought we were going to see. It would see that type of inflation to keep going.
And the big question is, will OPEC stay together? It's one thing when demand is increasing and you can slowly increase the amount of production you're putting out at higher and higher prices. It becomes a whole different thing when reducing your production, reducing the income coming into the revenues for your government. And if the war ends between Russia and the Ukraine, you think Russia wants to cut their production?
No, but I'll challenge you on the demand side, because I think that the third world countries that are trying to industrialize, even China, are going to buy up that slack demand and start putting. There's some year after, I can't remember the country. Maybe it was. I'm going to say maybe it was Nigeria, but said, "Oh, the heck with it. The rest of the Western world industrialized on coal and gas. Why should we be any different? We're going to keep buying."
Well, Nigeria produces a lot of oil.
I don't think they produce enough, though, like Saudi Arabia, to do what they need to do.
Saudi Arabia is.
But, then again, back into this country, if we do need it, we have the Permian Basin, but we produce more oil than all those countries anyways.
Mm-hmm.
If we need to really go for it, we can go with, we produce more natural gas than any of them.
But if you look at what oil prices have done during the week following Thanksgiving, they're down to $75 a barrel.
Right before and right during the Hamas went in, they went up to about $90, and they were in the 70s really quickly.
So, we disagree. I think we'll look at the numbers and see that oil demand by the end of 2024 will be less. And there may be more pressure to see cuts in production.
It could be, but I think it might be politically more popular than actually efficiently. I think that we're going to still need amounts of oil completely can transition out of it.
Oh, I agree. We're always going to have some oil product.
Now, there's demands to make it more cleaner, right? To do it with carbon, not offsets, but where they bury the carbon in the earth and do all the carbon recapture.
Mm-hmm.
But that, you and I have looked at that. That's so dang expensive.
Yeah.
And so, will companies? And we looked at the subsidies in the U.S. for doing that. Will they, want to do that because it's so damn?
Some of the carbon capture forest. So all you need to do is reduce the amount of carbon you're putting into the atmosphere, and you reduce the amount of CO2 that is in the atmosphere. Pie in the sky, stupid answer. But anyway, no. The question is, and we saw this in past times when they tried to cut back production. We saw a lot of cheating that went on. Nations that were supposed to be producing at X amount continued to produce at the old amount.
Right.
And ship it out.
Right.
Will we see the same thing? I would imagine the pressure in Russia with the pressure in countries like Nigeria, countries in third world countries, in Ecuador, in some of those countries which are financially strapped. And 22 countries in the world have so much debt due to COVID.
We haven't gotten to that part. You're jumping way ahead of the game here today, but we can get there. No, I agree.
But a lot of those countries produce oil.
I know.
So do you think that they're going to abide by a 10% cut or a 5% cut or whatever it is? I don't think so.
Remains to be seen.
It remains to be seen.
Yeah.
But I would guess that there'll be a lot of cheating.
We'll see. But
in any case, we're not talking about oil prices going up and going through inflation.
I don't think we're going to see them go through the roof. I could see back $90 to $100 a barrel if they cut production and the demand is still there. I think China's still demanding. They're still the largest coal user in the world. They have 50% of the world's coal is used.
And China is another thing. We should get to that a little bit later.
Well, we'll get to China. We'll get there. We can argue over oil for another. Yeah, it'll be interesting. We disagree on that subject, but I still think that there's going to be demand that's going to be relative.
Let's see.
But that brings us to things like China. China's buying all oil, making deals with OPEC countries, they're the largest debt holder, and they don't like to play by Western standards. They don't want to write down debt. They want to strangle these countries.
And the countries are pushing back on China.
They are, yeah. And China has its own problems. I mean, it's got its own set of issues that will it end up like Japan, right? 30 years of no growth, of zero growth, negative growth. If we say Japan, we're saying negative growth, negative interest rates, negative growth.
China's a situation where it's at an inflection point right now. And it seems like the more things slow down, the more he tries to push.
He doubles down on it. He's telling the young people there's in the cities, Mike.
Yeah.
21%. Could you imagine in the United States that if Seattle or any of the major cities had a 21% youth unemployment rate? We're talking people in their 20s graduating college. 21%. That's greater than what was the Great Depression? Was it 10%, 11%, somewhere around there?
Oh, it was 20.
Was it 20?
Yeah.
Okay. If we had 21% right now unemployment rates, and he's telling them to eat bitterness, he's doubling down on saying, oh no, you need to deal with this. You need to be, toughen up and eat bitterness. That's what he's telling them.
Well, and for a while, they could put a lot of people to work building homes and doing construction. And they did a lot of construction, and the government was a key factor in financing a lot of the development. But it reached the point where the government said, we're putting so much money into home building, we have to cut back on that. And when they cut back on it, the developers began to turn upside down.
Mm-hmm.
And now China has to look at maybe an infusion to save a lot of developers.
And then foreign investment, right? The way they're cracking down on companies that do business. They're making, there was a Japanese company, a story I read about it. The guy that went to China to operate this business, they said he couldn't leave the country. He said he was espionage because she was shipping, data back and forth from the home company to the satellite companies. Oh, you're a spy now. And they've done this to several companies. And so companies are reluctant to set up shop there because even though it has a lot of opportunity, they're like, why would I want to set up shop there? This is how I'm going to get treated.
Yeah.
And they're doubling down on that too, because Xi's whole motto is security. Security's more important than growth.
And, it seems as though the whole thing that developed pre-Xi, they understood the value of growth and pressing that. And they grew very, very fast.
Mm-hmm.
Xi's taken advantage of that and that growth and cracked down so much that it's limiting what they're doing. The growth of China used to run at 7 to 9%. It's getting 3%.
They're saying 5, right? Their goal is 5, which is still pie in the sky for them. It's 5% growth because they're worried about if they don't say at least 5, that people will turn really, really negative and despondent because they're not going to. The government won't see them as a growing economy anymore, and the people won't see it that way.
Yeah, and so, for a long time, it's been people that have said that China is going to dominate the world economic situation. It's beginning to look like they're reaching a peak and an inflection point, and you've talked about it before as well, that they have not made the transition to a consumer economy.
No, they're going to get stuck in what's called this middle income, a third world economy. We'll pick this up when we come back. It's an interesting topic. Don't go away.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
So, Mike, we just left off talking about China and what's called the middle income trap, where a third world economy that people they can't transition, export economy. They've built enough roads and airports and they can't do anymore, and now they need to transition to more consumer. I don't know why why other countries, different problems in which other countries that got stuck in that, I think their problems were different than China, but the sense that China, she doesn't want to release control. Yeah. And turning to a consumer economy means giving the citizens,
and it becomes a market, a top down,
and the way they control that means more information, more choice.
So I think the situation in China is going to get worse and people will drift back.
Yeah.
But that brings us to the rest of the world, and half of the revenues from S&P 500 companies come from overseas. And if you look at what's happening with the economies of the rest of the developed world, they're growing.
That brings you to last year, or the last 4 years, I'll say, right? Especially last year. What do we talk about? Trump, tariffs, right? All these problems that we're going to have, and nobody's going to trade, right? Everybody's going to go back and become localized economy with the Inflation Reduction Act. We're going to stop building everything here. We're going to rebuild the Rust Belt, which isn't necessarily a bad thing, but the numbers don't bear that out. So, even Europe was scared of this because we were supposed to provide $1 trillion in subsidies, tax benefits to domestic manufacturing, right?
Mm-hmm.
Now, but in the first 9 months of this year, we ended up buying just as much, if not more, from China as we did the years before. And so we bought, in comparison to GDP, we bought just as much from them. They bought just as much from everybody else around the world. So trade didn't stop. Maybe in certain specific items, as far as chips and those high-end things, maybe. But as far as trade itself, total trade in the numbers, there wasn't a huge dent in it. I think those big ticket items, the chips and stuff like that, sucked all the wind out of what was actually really going on.
Yeah. And so in the developed world, the countries are moving ahead. Worldwide economy is moving ahead.
Mm-hmm. Mm-hmm.
The issue is in the emerging nations, where during COVID, they had to borrow a lot of money. And a number of those countries borrowed money on the US dollar denominated bonds. And while their currency has sunk because their economies are doing poorly,
mm-hmm.
the dollar denominated bonds hold a steady value. So if your currency drops by 30%, that has simply made your bonds that you've issued
mm-hmm.
30% more
Right,
expensive.
Right.
And so you have 22 nations that are on the verge of bankruptcy.
Yeah, I mean, right now we're looking at the worst world debt crisis since the 1980s.
Yep.
And China's the biggest holder of, as I said, the biggest holder of that debt. And they're reluctant to restructure and write down some of the debt to these other countries. You know, they call it their loan-to-own program. And they when they go into these countries, Mike, they don't even use local labor. They bring their own people over to do the work, which doesn't. I mean, if you're a third world country and that's what your people don't have enough work and they're bringing their own workers over, what does that tell you?
Yeah.
But, you know, that brings us to another point, though, because geopolitically, the United States, because of what's going on here politically, it doesn't look, the political situation, because we're so divided, we look kind of weaker than we've had in the past.
Yeah.
Go ahead.
If you look at democracies and the number of countries that are moving away from democracies, it's been really significant in the last 5 years.
This is a huge election year, not just in the United States, but this is about 20 elections around the world that countries voting. Was it Argentina, one of the countries down there? Maybe it's the wrong country, but voting in their first sort of libertarian type candidate. It's going to be president down there.
So we were in Ecuador. We went to the Galapagos Islands, but on the day after we arrived was the presidential election in Ecuador.
Mm-hmm.
And they elected a very right-leaning person who wants to do away with a lot of the democratic reforms.
Mm-hmm.
They had a more moderate person that was running, and she lost the election.
Mm-hmm.
She wanted to increase the democratic things.
Mm-hmm.
And for a country like Ecuador's been a financial disaster. I don't know, maybe disaster is the wrong word. Inflation soared in Ecuador. So much so that they did away with the Ecuadorian currency and turned the currency over to the US dollar. It's something that is being discussed in Argentina right now. Argentina, their inflation is shooting through the roof. And to get around that, what they're talking about is converting the currency to the US dollar because the dollar is stable. It is something that a number of countries have done. But once you do that, you have to straighten away the economy. And if you look at the economy of Ecuador, and I use Ecuador just because we were there and it was a short, their number one industry is oil, and oil is dropping. Well, demand is dropping. Number two is agriculture. Number three is tourism. And in Ecuador, they have a problem because the gangs and the cartels have suddenly multiplied since COVID. Guayaquil is their second largest city, and it's not safe for Americans to be there, according to the U.S. State Department. Quito is fine, Cuenca is fine, but because of the drug-related activity and the cartels, their tourism is down 65%.
Yeah, that's like El Salvador when they thought they were going to nationalize their oil. Right? Oil prices were high, and then they shut down. Was it not El Salvador? It went next to them, I think. Was it El Salvador?
El Salvador converted to Bitcoin.
No, it was. What was the country down there? I can't think of the country. But
Nicaragua.
Chavez was the Hugo Chavez was the president. Venezuela. Thank you. I keep getting those confused. And then the oil prices, world oil prices tanked, and the country inflation skyrocketed.
And Maduro, who has not restored the economic viability of Venezuela.
Yeah.
They have all sorts of problems, and the economy continues to sink and sink and sink.
And even in a place like Russia with the war with the Ukraine, Putin's coming up for election, whatever you call an election, but he's sinking all his money into the military. That country, industrial-wise, as far as its people, it's nothing.
Yeah, and he wants them to tighten their belts and to get by on less.
Yeah.
Except for the soldiers, he's worried about a revolt in the army.
Yeah, he already saw that, but he took care of that one.
Yeah.
So you know what's going to happen if you any sort of coup d'état with him.
But there's an issue in Russia because when they were in Afghanistan, and it's not been so true with the Ukraine war, but in Afghanistan, what would happen, because Afghanistan was part of Russia when they revolted, And they would cut off, if they killed a Russian soldier, they'd cut off his ears and mail the ears to his parents.
Mm-hmm.
And so you had a lot of demonstrations by the mothers and the relatives and the wives coming out in the streets and revolting against what was going on in Afghanistan, to the point that eventually they said, okay, we're done.
Mm-hmm.
Afghanistan can be independent. And they turned it over to bin Laden, whoever. But I mean, I think there's a fear that that's going to happen now in Russia with the soldiers coming back and deaths from the Ukraine.
Yeah, and I mean, the only support Putin's getting is from China, right? And then there's this whole thing about going into last year and this year that China and the U.S. are headed towards a Cold War. And that, but when you look at what China does around the world and what the United States does around the world, it's drastically different.
Yes.
Like during the Cold War with Russia, what Russia did nothing around compared to what the U.S. did. The U.S., the Green Revolution in India, where they helped India, which was a third world country at the time in the 60s, to get their crops and get their up to snuff so they could feed their people.
Yeah.
And then PEPFAR, which we helped with the AIDS epidemic in the 80s. We kept funding that to help the continent of Africa with AIDS. But those are the things that we do, and I think that regardless, the world is as messed up as it is, we're still the country to look for as is solid, more solid than any other country right now.
Yeah. But to summarize, in the developed countries, their economies are growing and things are getting really straightened around. In the emerging countries, you have huge debt problems and continued problems with revenues.
Mm-hmm.
And if oil prices sink, it will make the situation worse rather than. So all of that's, when you look at the worldwide economy, the emerging nations are a small amount. So it's going to have a less impact, but it's going to really have a significant impact because they will be going to bankruptcy. They'll be trimming down their bonds.
Mm-hmm.
And for those people that hold international bonds and international stocks,
mm-hmm.
it could have a dramatic impact. So, which brings us to the stock market.
Oh, is that what we're here to talk about?
Yeah.
Oh, that's all right.
So don't go away. When we return, we're going to talk about the stock market and how all this plays into the stock prices and stock market for 2024.
So, Mike, we've been rambling around the world here. We've gone to Ecuador, Russia, China. And what this all means is for the average investor, for people in the portfolio, where are things going? How will things potentially shake out in 2024? Nobody has any. Where are we going?
So what we've seen is there's a huge amount of money sitting on the side. It's been there all year. People have been expecting the Fed is raising interest rates. Recessions are going to happen. Stock prices are going to crater down. And in some cases, that's been true. And they've been waiting to invest the cash at lower prices. But eventually you begin to give up. Eventually that money starts to flow back in to stocks.
I just read this morning, Mike, that FOMO is back. And if you don't know what FOMO is, it's fear of missing out. People are afraid now. Now they're like, oh, wait a second, I better get on this because things just keep on going. I keep waiting for things to go down, but things just keep going up.
Yeah, and I believe that that's one of the three factors of the market. I think there's the third factor is just what you mentioned, the fear of looking stupid. For mutual fund managers, for investment managers, being out of the market and watching the market rise and rise up and being out, trying to sell their portfolio performance as underperformance because they were waiting for the recession and waiting for Godot. So they will start to ease in. More the market will flow in and will drive it up even further.
We just keep seeing profits like tech companies. He goes, oh, tech is dead. We just keep seeing profits from tech companies, and we're like, not off the chart. And some of them are off the charts.
Some are off the charts.
Some one in our portfolio that went this week. I was like, wow. And that company's still going. I think it's going to keep on going.
And people say, well, maybe it was just this quarter.
But a guy who just died recently, Mr. Charlie Munger, Warren Buffett. But before he met Warren Buffett, He convinced Warren Buffett that it's okay to pay a better price for a stock if the quality's really there.
Yeah.
That's why they bought Apple. They're like, well, that's really expensive. But he convinced them, wait a second. And Warren didn't see it till he went to a family reunion or something. And he's like looking at all his grandkids and great grandkids. He's like, what are they all doing? They're all on their iPhone. iPhone? What's an iPhone? Then you realize, oh, wait a second. This is pretty good. And he could, because them two wouldn't buy anything unless they could wrap their brain around it.
Mm-hmm.
And they could wrap their brain around, oh, this is what people do with these things, and they like them and they're useful.
Yeah.
And so buying good companies, even though maybe the price is a little high, and holding on to them for a long period of time is...
Yeah. But you have to be sure that the companies are solid and they're going to continue to produce profits. Or if they're not profit, there's a path to profitability that they're going to see. And I'm going to see something that we haven't seen for a number of years. And that's we're going to see companies issuing stock to repurchase their bonds. Because when bond yields are really low, companies will issue bonds to call in and buy back their stock. But when interest rates are really high and they have to refinance bonds at a lower rate, they have to consider issuing stock instead of issuing new bonds to replace the old bonds. It's too bad the U.S. government couldn't do that as interest rates rise. It's too bad that the U.S. government, when rates were so low, didn't issue a lot of 30-year bonds instead of
10-year, right?
And 5-year.
And 5-year, yeah.
2-year. Somebody fell asleep at the switch there. So we're probably going to see more stock coming from existing companies that have bonds outstanding. We're going to see a number of IPOs come. We had a tremendous number of companies that were started during COVID. In 2021, we had more little companies starting up than we've ever seen in history by a large margin. And that brings you to another point, Mike, on the stocks. Are we going to see another? Are we in an AI? I mean, the prediction is that this is a revolutionary technology that's going to keep on advancing. We probably are, and it's going to make things. I mean, the argument I heard this morning was over Google and ChatGPT. It's like nobody's using Google anymore. People just go to ChatGPT, and whether Google's even going to be relevant, Google could be, creatively destructed, for lack of a better term, that people are going to this generative AI and because it gives them a better answer than just going to Google. Yeah, it certainly is going to come into play. And there's going to be so many companies. It's hard to kind of pick through the companies because it's like going back to the .com times and I lived through that time, when you had a machine shop that came public and they put at the end of their name .com. Yeah. And they got 3 times the price they would have gotten if it would have been just a straight machine shop. Do you think we went through that at the beginning of this year, though? Because there was a lot of AI companies, and I watched them just because I wanted to watch them, and they popped from they were a couple days from being delisted from the NASDAQ, and they went from 58 cents to $7 in like a week, and then right back down. It's gonna. Picking through, Jeff, it's going to be that kind of situation, knowing which companies really solid AI and which don't, and which ones tout what they do as AI, when in fact it's not really AI at all. They're consulting companies saying you can't find what, you read a couple quarters back on their 10Qs and you don't see AI, and then all of a sudden, you read a couple last quarters and it's mentioned 75 times, and you're like, well, why is it mentioned 75 times this time? Because last quarter only mentioned it twice. Yeah. You got to be a little bit suspect. Yeah. And another interesting blockchain technology, cryptocurrency. That's the other thing. Will we see a CBDC? Central bank digital currency. I believe in the long term we probably will. Yeah. In the short term, we're going to see cryptocurrency. And this year could be the year where we see a mud drop. I read an article which said Bitcoin will be 100,000 per coin. Will it be 100,000 or will it be 1,000? Well, it halves this year. That's the big thing, right? If you have a coin, and the value is going to double because it halves in 2020. They're talking about quadrupling. Quadrupling. It could. I mean, if it's, But it could also be at 1,000. It could be. Yeah. We'll see. Nobody knows. My guess is there's a greater probability it's 1,000. At least it's going to be.
Yeah.
Then they're probably 1,000.
Why do you think it's going to be 1,000?
Because there's nothing to support it except
I agree
speculation.
With you. I agree with you. It is speculation. It's completely on supply and demand.
But, when the last person bought the tulip bulbs,
Yeah.
the tulip bulb market fell apart. That wraps us up for this week. Have a wonderful week, a wonderful weekend. And 2024 looks like it's going to be a very exciting year. Have a good week next week to talk about money. And if you miss any of this program, you can find us on YouTube. About Money, log on to About Money and see. You can also find our website, adamsfinancialconcepts.com, and you can get some great insights there. You can sign up for our newsletter. Mail us at adamsfinancialconcepts.com. Log on to the website, fill out your information on the contact form, and we will send you a free newsletter which comes out probably 40 to 50 times a year. Have a great weekend next Saturday to talk about money.